Hey everyone, and welcome to The Explainer. This week, the markets have been sending some really mixed signals. Japan's stock market just rocketed to a new all-time high. But right after that, the U.S. market slammed on the brakes. So why the big difference? Well, it all seems to hinge on this one big event that has, well, pretty much everyone holding their breath. So check out this number. What is it? Well, that's the Nikkei 225, Japan's big stock index, at the closing bell on August 18th. A brand new, record-breaking high. This is the good news part of our story, right? A sign of incredible strength, really driven by those big export companies and a flood of investor money. But spoiler alert, that feeling didn't last long.
And that's where we get this tale of two markets. Over in Japan, you've got a historic celebration. But on the other side of the world, just one day later, a pretty significant pullback, especially in the tech-heavy Nasdaq. So, what gives? Why are two of the world's most important economies suddenly moving in opposite directions? All right, so to get to the bottom of this, here's what we're going to do. We'll quickly touch on this week's records, then really dig into the Jackson Hole question and why it matters so much. After that, we'll look at three possible futures, what's really driving each market under the hood, and we'll wrap it all up with your final takeaway. Let's get into it.
Okay, first up, let's just get grounded in the facts. This was a week that really started with a bang, but it ended with a pretty big question mark. Japan hit its peak, and then the entire mood seemed to shift globally.
Yeah, you can see here the U.S. market definitely stalled out. While the Dow kind of treaded water, the S&P 500 dipped, and the tech-heavy Nasdaq dropped a significant 1.5%. Now, it wasn't a crash, not by a long shot, but it was a super clear signal of caution. Investors taking some profits off the table, stepping back a bit. And the big question is, why? And that why brings us to our next big topic. See, the reason for all this nervousness has a name, the Jackson Hole Economic Symposium. It's this annual meeting in Wyoming that has the entire financial world just watching and waiting.
So what is this thing anyway? Okay, think of it like the Super Bowl for the world's most powerful economic players. It's the spot where the U.S. Federal Reserve often drops major hints about its future plans for interest rates and policy. And really, one single speech from Fed Chair Jerome Powell can literally set the market's direction for months. And right here, this is the core of all the tension. See, the market has pretty much already decided what it wants to happen, betting big on an interest rate cut in September. But, that's just an expectation. The reality? It all hinges on what Powell actually says. And that uncertainty is exactly why the U.S. market tapped the brakes.
Yeah, and this isn't just any old conference. History shows us again and again that Jackson Hole is often a major turning point, a moment that can either light a fire under the market or, well, trigger a big sell-off. Okay, so for a perfect example of a go signal, let's look back at 2010. Back then, Fed Chair Ben Bernanke hinted at more quantitative easing, QE2, which is basically the Fed pumping money into the economy to get things moving. The market heard that supportive message loud and clear and boom, it kicked off a massive sustained rally.
But then we saw the exact opposite happen just a couple of years ago, in 2022. Fed Chair Powell came out with this surprisingly tough or hawkish message on fighting inflation, and the market was just shocked. The S&P 500 dropped over 3% that same day, setting a really negative tone for weeks. So yeah, it's pretty clear this one event has the power to just flip the market's direction on a dime.
So, with that history lesson in mind, let's pivot to the future. Based on what analysts are seeing right now, we can basically map out three potential scenarios for what could happen right after Powell speaks.
Now, the odds aren't evenly split here. Most analysts are putting a 50% chance on what they call the base case scenario. That's the most likely one. And the other two possibilities, they're split right down the middle, with a 25% chance for an upside surprise and a 25% chance for a downside shock. So let's break down what each of those actually looks like.
All right, so the base scenario, this is basically a carefully balanced message, the Goldilocks message, if you will. Powell doesn't go all in on a rate cut, but he keeps the door open, saying, it all depends on the data. It's not the full-on green light the market is hoping for, but it's not a red light either. The result would probably be a collective sigh of relief, but not a huge new rally. Markets in both the U.S. and Japan would likely just kind of hang out in a high range without really breaking out one way or the other. Okay, now for the fun one, the upside scenario. In this version of reality, Powell sounds way more confident that inflation is beat. This would be the market getting the exact confirmation it's been waiting for. Confidence in that September rate cut would just skyrocket, and that would likely send U.S. growth and tech stocks soaring. And for Japan, this could be the fuel that pushes the market to try and retest those record highs we just saw.
And finally, we have the downside scenario. This is basically the 2022 nightmare scenario all over again. If Powell steps up to the mic and sounds way more worried about inflation than anyone expects, while all those hopes for a September rate cut would just evaporate. That could trigger a mini shock, and you'd likely see a sharp, short-term drop in U.S. stocks and a whole lot of volatility for Japan's key sectors like semiconductors.
But look, Jackson Hole isn't the only thing that matters here. To really get why Japan and the U.S. are on kind of different tracks right now, we have to look deeper at the fundamental forces, the engines and the headwinds at play in each economy. And when you look under the hood, the stories for each market are actually pretty different. Japan, for its part, is being powered by some really strong internal engines. You've got corporate reforms boosting shareholder payouts, which is huge. There's a ton of new investment going into AI and green tech. And get this, for the first time in decades, wages and prices are actually growing together. Meanwhile, the U.S. is facing some real headwinds. The economy is trying to juggle high growth and high interest rates at the same time, and that's a really tricky balancing act. Plus, a lot of the market's recent gains have been driven by just a handful of those big, magnificent tech stocks, which creates its own kind of imbalance.
Okay, so we've looked at the recent highs, the history, the possible futures. What's the bottom line here? Let's bring it all home and talk about what you should really be watching for. All right, here's what this all boils down to for you. 3 key things. First, this is a turning point. Make no mistake. What comes out of Jackson Hole is going to set the short-term tone for the market. Second, selection is everything right now. The fundamentals we just talked about, they're going to matter more than ever. Not every stock is going to react the same way. And third, just be ready for some volatility because expectations are so sky high, any kind of surprise, good or bad, could cause some really sharp, sudden swings. And that brings us to our final question, the one we want to leave with you. The signals are mixed, the turning point is right here, so which future do you think is most likely? The balanced message, the bullish green light, or that hawkish surprise? The stage is set, and now all we can do is wait. Thanks for tuning in to The Explainer.